Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. Well, to begin with, the dollar index, which measures the greenback strength against a basket of 6 major currencies, staged a further rally on Friday, and it sent some of the markets on a bit of a wild goose chase. And the fact is that after the initial move to the upside for the Australian dollar, first of all, you can see the rejection from that 72.10 resistance has plummeted back down towards this level, now lower from 55 to 30.35, back to the recent challenging levels as it previously can see. Now a break and a close underneath this level of 71.30 would open up the way towards 70 cents and give an objective of 69. But the immediate target will be seen somewhere around 70, 40, 60, as the 69 cent is seen as a broader outlook. Nevertheless, technicals are bearish. We've got the RSI married with the MACD, which at least at this present stage gives some confirmation of where the market is actually slightly directed to. And I believe that's at this level of 30. You can see by the euro, after the first challenge above that 119 was rejected. The second time we attempted to try and climb higher ends posting a bearish outside range day. Now we wait for confirmation of this signal. And if we do get a move through 117.50, then this would see a further slide, not at 116.95, but towards the bottom side of this range, which is around 114.5, with the immediate target roughly seen around 116.90 as a short-term base, but not expected to hold. With the dollar increasing in terms of bullishness, with the euro weighted at 57.6 to the US dollar, you can see that the market with the RSI married up with the MACD does give further indication, and along with the bears posting this outside range day and getting a close under 117.50 should enforce a further slide to eventually reach its objective. A long-legged doji in play, and also with the fact is that this bullish outside range day has given somewhat a bit of a conflicting story, due to the fact is that lacking support at this stage from where we are sitting is that the market could see the top side negated. And what I mean by that is that see the bullish outside range day fail to support its signal and see the market tumble back towards the bottom side of around 105 or maybe down to 104. However, do be a little bit cautious because the market could be a little bit whipsawed and it could easily give you some false indication of where the market's likely to go, reason behind this long-legged doji. So I'd rather sort of sit out for the moment, just for 24 hours, and see how we can play. With the bias though, holding bullish because of this firm candle, we could see a move back to 106. But as I mentioned, this doji has given some conflicting outlook towards the upside move. Let's see. As you can see, we've got a bearish outside range day now when it comes to the pound, after taking another attempt at that 132 figure 60 area. You can see here after 4 challenges, and on the 4th one we posted a bearish outside range day that waits confirmation. This confirmation has been now quite a few days, as you can see here right across the board at 130.30, and if we do get a break under 130.30, then I do anticipate that we will see these indicators marry up into a stronger marriage and therefore see a slide down towards 127.5. But wait for the confirmation and the close of the New York, that is, base of 130.30 to support my bearish outlook. The bears have come through very well on sterling yen, with the trend taken out and along with the support level taken out at 138.70. You can see the market is now posting further weaker play from the outlook from the marriage to the RSI and the MACD, and also failing to break above this level of 138.70.80 level. I believe the target to the downside is around 137.15 and reassess from there. Still lacking support on this gold pattern that was supporting once to a bull case. I feel that from the recent sell-off, we're not quite found the bottom side, and there's still a little bit more potential of flushing out some bulls, and therefore could see the market drop down towards the 1,900, and lower to about 1,880 before any turnaround. Due to the fact that these indicators are holding as they are to the bearish case, and their marriage is also enforcing this view, keeps the negative outlook for the start for gold for this week. It has been a very mixed pattern when it comes to oil. Nevertheless, we're still maintaining over $42 a barrel, which is quite impressive considering these candles got a hanging man, and we've got a few other candles in here that really support a little bit weaker play, and also the indicators, but we haven't got confirmation to the downside to support a bear case. Therefore, I believe the market could eventually hold its view still towards $43 to $46 a barrel. Well, that wraps it for today. Thank you very much for joining me. And as always, look out for the intraday report. Let me enjoy the great start to this day and to the new week.